Yeah. Deposits are hitting my base. This is real life, not a phase. We don't just do this for play. Catching these profits today. Money is all in the way. Shit, man, I'm running my race. Deposits are hitting my base. This is real life, not a phase. We just don't do this for play. Catching these profits today. Money is all in my way. Shit, man, I'm running my race. My entire team is my life. My entries are always precise. My exits are all time concise. My future is looking real bright. Even though BCLS is all on the plan, I know by tonight my profits will smash. These vectors will dash. I'm hitting TPs, alright. Split a click up fast, got a cash so fast, so you know what the deal. Don't trade the trade, cause I'm paid to wait. I got these niggas like, man, this ain't real. In the zone 1, zone 2, hit a lick for the price, yeah, kill what we kill. Hit the red pill, always on the blue. Can you see this damn all on my grill? Pick up the moves, pick up the weight, all up in the markets all day. Pick up the profits, markets are thoughtless. I'm catching the whole back today. We are the nation, and we stand proud, rubbing all this cash all deep in your face. Ice on froze, nobody knows what's coming next. Hyper drives the way. Pull up, yeah, whip back. And it's force funded, killing the game. Got it, I'm buffing my entries to trigger, so it's true that the gun did my chick's bad. And I'm not fronting, and she's giving Europe, that London. If I show up in the kill zone on time, yeah, I'm gunning, yeah. Deposits are hitting my base. This is real life, not a phase. We don't just do this for play. Catching these profits today. Money is all in the way. Shit, man, I'm running my race. Deposits are hitting my base. This is real life, not a phase. We just don't do this for play. Catching these profits today. Money is all in my way. Shit, man, I'm running my race. I'm gunning, yeah. Deposits are hitting my base. This is real life, not a phase. We don't just do this for play. Catching these profits today. Money is all in the way. Shit, man, I'm running my race. Deposits are hitting my base. This is real life, not a phase. We just don't do this for play. Catching these profits today.
Running in my face. Chairman, I'm running my face, yeah. What's the word, family? What is going on, guys? Welcome back. We are live once again, man, for the second stream of the day. You guys know we do have, once again, the most important news event of this entire week, possibly of this entire month, with the big dogs coming out. Right, we're talking about the FOMC statement, the interest rate decision, and then the most important thing, what I believe is the most important, is going to be the press conference that follows that. So we're going to have a lot to talk about today, a lot to go over. And hopefully everybody is here ready, locked in, so that we can say what we get from it, family. Hey, maybe the beers in the daytime. Hey, yeah, I've been up in a lifetime. Pull up, pull up,
Deposits are hitting my base. This is real life, not a phase. We don't just do this for play. Catching these profits today. Money is all in the way. Shit, man, I'm running my race. Deposits are hitting my base.
This is real life, not a craze. We just don't do this for play. Yeah. What's going on, Doug? I see you in the building. Doug Dendy in the house. What's going on, my brother? I appreciate you for tuning in today. Identity is always precise. In the best of the yes, out of the best, with the fight. Yeah. Come on. Don't trade the weight, don't trade the weight. They will do. Pull up. Right to the things where the buyers on the way. Hey, pull up. Got to fund it. I'm gunning, yeah. Ready to get it in my face. This is real life, not a phase. We just don't do this for play, yeah. This song is a banger, family. Oh my goodness. Jumping, I'm running my race, yeah. This is real life, not a phase. We just don't do this for play now. Tell me no matter no way. And I'm running my race, yeah. Yes, family, what's going on, guys? Good afternoon. Hopefully you guys are all having a phenomenal day so far. Good afternoon, good evening, depending on where you're tuning in from right now, family. It is your boy Abel, and like I said, we are back with another stream. We do got FOMC and the Fed interest rate decision in about an hour or so. So we gonna keep seeing what's up. We gonna go in the bucks. We just stacking it up. I mean, I'm running my race. Standing, I'm running my race. Yeah. This is real life, not a phase. Do this for play. Yeah. And I'm running my race. I'm running my race. Yeah. Banger, family. That song was an absolute stud of a banger. But man, Bitcoin is falling. Let's get it. And depending on what happens in a matter of 20 minutes, actually in an hour, Bitcoin can possibly fall even further. Crazy. Let me see. I want to listen to. Where's my song at, man? Where's my song at? Which one is it? Oh, that was cool. Yeah, this song right here is fire. All right, let's see. We got Tyson in the building. What's going on, Tyson? Marcus, good to see you again, my brother. Abdullah in the house. Buy or sell? Let's do both, man. How about we do both, Abdullah? Let's press both, right? Buy and sell and see what happens, my brother. All right, and see what we get, off of that, man. Let's see. We got BTC Mommy in the building. What's going on? Good to see you in the chat as well. Appreciate you tuning in with me today. We're going to have a very interesting next hour or so to see what the overall markets are going to do, based on what the Fed can possibly do. So, nah, this song is tough right here. Hey. Terso is back. Let's get it. What's going on, Terso? Good to see you back in the building. I see you said 50K is the target for Bitcoin. That would be insane. A $50,000 Bitcoin would be nuts. I'm not even gonna lie. But I see what you're looking at. It's possible, man. It really is possible for us to fall into that area for sure. Absolutely possible, man. Again, depending on what happens today, we can definitely see Bitcoin probably fall down into those lower levels for sure. Yeah. Anytime I'm trying to feel my face in a row. Nah, this song is so tough. Oh yeah, song is a banger, absolute banger. Give me a second, family. Let's see what we got here. Give me 1 second. Let me tell you, say the bit of face and then a roll. Every time the bit of face and a roll. Give me a second, family. We're going to keep this up so that we can see when Mr. Powell eventually goes live. Oh, that little montage was dope right there. Alright, let's see what else we got here. Hey, coaching fam, let's go. Linda in the building. What's going on, Linda? Good to see you. Victory in the house. What's up, Victory? Good to see you as well. I've been a big follower of yours for over 3 years now. Appreciate that. It means I might be doing some, right, man? If y'all been rocking with me for a few years now, man. So I'm grateful for that, for sure. All right, because if I wasn't providing value, y'all would not been following me. So trust me, I'm extremely humbled and I'm extremely grateful for you guys showing up the way you guys do, man. Nah, we got to play that song again. That song was too tough, bro. That song is called Let You Go, by the way. Let You Go. That song is called Let You Go. So we are about 15 minutes out here, guys, from the interest rate decision. Again, we shouldn't be surprised about what we expect from that. It's pretty almost like 100% certain that we're going to just keep interest rates at 5.5%. There's no way in hell they're going to cut interest rates. But I don't think they're going to rise. I don't think they're going to start to raise it neither. That'll be a little bit too much and will cause too much panic in the overall marketplace. So it's around a 90 to 100% chance that we keep interest rates at 5.5%, which again shouldn't be a surprise for most people. You know, the Fed is not going to be able to try to play around with rates again until they actually get a little bit more of a decision, or at least confidence in what they think the economy is headed, or the direction that the economy is headed in. So we definitely got to be aware of that, family. But we do got that in about 15 minutes. All right, what's the word, Jose? Appreciate you. What do you think the Fed will do? Yep, I'm gonna get into that right now too. Right, I'm gonna give you guys all my thoughts and opinions, guys, over the next 15 minutes. But everything I say, honestly, is just my thoughts and my opinions. All right, it's not listening to nobody else. Just from me and my perspective and what I believe the markets can do, based off the reaction that we get here today. Just give me a 1 second. All right, let's see what we got. Jason in the building, Freezone in the building. Let's get it. Who sings this? This is Tyrone right here. It's still Tyrone. It's still in that same exact playlist. All right, it's my trading playlist right here, right? So yeah, this is still Mr. Tyrone, Mr. Neon FX. You know the vibes. Alright, family, so let me go ahead and just give you guys my thoughts real quick, my opinions on what I think is going to happen today. But before we even do that, we have to really, we have to like set the landscape of what we're actually dealing with, right? Right now, guys, the Federal Reserve, right, with Mr. Jerome Powell at the head of it, we are dealing with a very interesting situation now, because currently today, interest rates are sitting at 5.5%, which is kind of high, a lot higher than what they would even want it to be. But the reason why interest rates were hiked so aggressively up to the 5.5% level was because they were trying to go ahead and slow down the demand that we were seeing across the board in all assets across the board, right? Because the amount of money that was printed throughout COVID really had everybody believing that they were rich, right? And because of that, everybody was getting the money that they were getting, whether it's through stimulus or other different plays like the PPI play, whatever it is, they were spending it immediately, right? And them spending it, consumers spending money as aggressively as we were after COVID and after all, just it was so easy to get access to money 3 years ago that it caused everything to increase in price, right? The demand for everything, while the supply chains were having a lot of issues, caused the price of everything to increase. We're talking about the price of real estate, the price of the various stocks. Honestly, the whole market went crazy. We're talking about the price of food, goods, and services that we eat on a daily. Everything increased because of COVID, because of the supply shock that happened when we ended up having to shut down the world. On top of that, access to money was a lot easier, so people were able to have money and spend it. They wanted to spend it, which forced obviously the price of everything to increase. So in order for the Fed to try to, stimulate that, or at least the Fed to try to combat that, they ended up having to raise interest rates, right, to try to slow down the demand for everything across the board. Now, we did see a nice little slowdown like a year ago, but then everything started to pick back up, right? As a whole, we've seen inflation come down from the 8% that it was, and now we're sitting at around 3%, 3.5%, depending on which indicator you read. But now it's starting to trickle back up. Like literally the past couple readings have all started to show that inflation is slowly coming back. So that is pretty much where we're at now, right? The Fed's goal is to get inflation to 2%. But to get to that point is showing that it's going to be tougher to do so, right? They are now forced to keep interest rates elevated at this 5.5% level to try to still slow down demand. Because if we start to cut rates too soon, then people are going to just start to splurge again, and that's not going to help with inflation. If we cut too soon, inflation goes crazy again, and now we're back to dealing with inflationary scares, which is going to impact everybody, right? Because that means the price of everything is increasing, which is what they don't want to do. Guys, the Fed has a dual mandate that they have to follow, right? Who knows what those dual mandates are? Who knows what those dual mandates are, family? Right? What are the two things? Honestly, there's more, but what are the two main things that the Fed has to worry about? And not just the Federal Reserve, but every central bank needs to really focus on and be able to control. Who knows? Who knows? Right? Well, we'll talk about it, right? The first thing is their job is to maintain price stability. We haven't had stable prices because of the way inflation's been going, right? Everything's been going up drastically, and that is the opposite of stable prices, right? They want our economy to grow, so we do expect our the prices across the board to increase, but at a very conservative rate. We haven't seen that, right? So stabilized prices is the first thing that they want to do. They want to make sure that prices across the board are stable enough to where the average consumer, especially those that are living paycheck to paycheck essentially, are still able to maintain and live. And then the second one is the labor market, right? They still want to have an extremely tight labor market, and that's at least that's what we have, right? So we don't have stable prices, but we do have a strong labor market, which is why their focus hasn't truly been on the labor market. Their focus has been on trying to stabilize prices. Raising interest rates was one measure that they tried to do to stabilize prices. But now that we're seeing inflation start to increase again, now the conversations start to come to Jerome and saying, okay, hold on, what do we do next? Because we don't want inflation to truly go ahead and continue to trend higher. We have to do something, but whatever it is that we do is going to either lead us into a recession or is going to lead us into something possibly worse. Right? So the Fed is dealing with a lot right now. But today is going to be very important because today is going to be the first time that we hear Jerome Powell actually speak and answer questions regarding the fact that we've had inflation increase the past few months. This is going to be the first time he speaks on it, right? So again, whatever he says is going to absolutely cause these markets to go crazy. And it's up to us as traders to try to figure out what the sentiment is overall. If we can figure out what the sentiment is, then we as traders understand where the direction of these markets are going to go. Okay? So that's pretty much where we're at in terms of the grand scheme of things. Now, I believe today, Jerome Powell was pretty much just going to double down on the stuff that he's been saying in the past, right? We can't lower rates just yet. We have to maintain that higher for longer stance. Inflation is on the rise, so we're going to monitor it meeting by meeting, right? And that's pretty much going to be like the main focus points that he talks about, right? Obviously, inflation is back on the rise. We're going to try to regulate it. There's not going to be no change in interest rates, and we're just going to take it meeting by meeting. That's essentially what he's just going to say, right? Well, everybody knows this already. But what I'm going to be trying to focus on, and this is when we actually watch the press conference itself, what I'm going to be focused on is to see if we can find some hints that he can give us as to what his plan and the Fed's plan is as a whole. Right? Because the thing about Jerome Powell, his voice is so influential in these markets because of the position he's in. He can't directly come out and say certain things. So he's going to try to beat around the bush and try to give us hints as to what he's saying. And it's up to us to try to dissect that. Okay? Fundamental analysis, guys, is crucial. Especially this fundamental event. This can literally set the tone for the next few months. Right? So if Jerome Powell comes out and he's talking very, and if he's coming with a tone that is essentially leaning towards us having to potentially deal with inflation again, I think the markets are going to tank. I think the dollar is going to benefit from that, right? If he really just talks about inflation increasing like crazy, and he continues to beat that point, like, okay, inflation is, we have to regulate it. We have to regulate it. We have to control it, right? If he's going like that, then I think the dollar is going to fly, and I think everything else is going to fall. But if he does the opposite, and he's like, you know what? Everything is looking good. Yes, inflation is rising a little bit, but everything still looks solid. And unemployment, is still relatively low. We have seen an uptick in unemployment, which is honestly good for them, but if he starts to say like that and he's talking very optimistic, hey, I don't think it's going to happen, but the markets might actually rally off of that, right? If he's very optimistic and he's acting as if these last inflationary readings don't really matter, then yeah, indices might fly, gold might fly, the dollar might tank, and so on and so forth. I don't think he's going to take that stance, though. He might, and that's where we're going to watch it. We're not going to watch the whole meeting, but we're going to watch a bunch of it. Right, but that's the stance he could take. Is he just going to be super optimistic, or he's going to be very fearful and fear-mongering and at least trying to tell people the real? Like, this is the situation we're in, right? We're dealing with inflation again. It's coming back. We have to really hold, higher for longer. We have to be a little bit more aggressive. We're going to take a meeting to meeting, but we're not going to hesitate to even potentially raise interest rates. If he mentions the potential possibility of raising rates again, holy shit, these markets are going to tank, and the dollar is going to fly. Okay, so hopefully this is making a little sense, family, right? But that's pretty much the overall landscape of what the Fed is dealing with, how Jerome Powell can react and respond, and why it's important for us traders to be aware of it. Okay, so we're going to see how this comes out. Again, nobody's going to be surprised that this comes out at 5.5% in 4 minutes. Like, we all know this is going to come out at 5.5. So the most important thing, guys, that's really going to shake price is going to be the press conference. The press conference was really going to be where we're able to get the meats and potatoes of everything. So that's going to be dope. All right, let's see what we got here. What's good, fam? Go took me out and fell. Story of my life. Yeah, I mean, we did a good thing we ended up going break even on that, though, right? Because gold did end up taking it out. It did take us out, and it did end up falling completely. But it is what it is, bro. It's cool. And even the NQ position that we in, right? This ever so slight hit me out and stopped me out, but it's still like damn near right back at our entry point, right? Like if my stop wasn't so tight below these lows, we'll actually be back in profit here on NQ. But either way, it still was a really good session. We ended up making a couple dollars today, not much. We ended up making a couple dollars, right? A lot of the positions that we did take, like most of mine got hit at break even. The trade that I called out with US 30 and the gold position that I took from Saint, them both hit break even, right? The NQ did take a little bit of a loss, but I wasn't risking heavy anyways on that, right? But we should have expected something like this, right? The market was going to be choppy leading up into this news event. And that's why all these prices have just been going up and down, right? And everything has been essentially just stuck in a small range right here. Like even gold, right? Gold since this morning really hasn't done much, like at all, right? NQ since this morning definitely hasn't done a damn thing. And that's again to be expected when we have a news event of this magnitude on the horizon, right? So it is what it is. But either way, we had a really good session this morning. Really good session this morning. And it was lit. I'm not even gonna lie. Let's see what we got here. Let me check. We live. Let's go. Maintain. Hey, you were close, bro. Stabilized prior to employment. Yep. What's up, family? Missed you on the morning. What's going on, my brother Matthew? Appreciate you. We missed you as well, bro. We had a really good, great conversation this morning. It was a dope session. Let's see. Abel, you had the jinx me earlier as soon as you posted that story. That came and wrecked us. It did, bro. You know what's crazy, bro? The freaking screenshot rule always really never fails. I promise y'all, bro. Like the moment you screenshot or try to celebrate something, the markets just do a U-turn on your ass. Every time. Like I don't think there's been not one time where I screenshotted or recorded something or celebrated something before it hit take profit and actually won. Like almost every time we screenshot or we celebrate before it hits TP, always comes back. I swear it does. Like it never fails, man. Like that probably has like 100% win rate right on that. So but it's cool though. Let's see, you got back in. Hey man, let's see what happens. Let's see what happens in a couple minutes, family. We are about 2 minutes out here from the reading. We are about 2 minutes out from the interest rate decision itself. Again, it's highly expected just to come out at 5.5%. I'm interested to see how this thing actually reacts on it though. If we do come out, when we do come out at 5.5%, this is going to be interesting, right? This is going to be interesting to see, right? Because what if we come out at 5.5 and the dollar absolutely tanks? That's a possibility. If this were to happen, where we came out at 5.5 and the dollar absolutely tanked, I might look to buy that up. I'm not even gonna lie. Like I might look to actually look for some opportunities to start buying the dollar once again. Just because I believe if we do keep it at 5.5%, that is more bullish the dollar than bullish anything else. Because interest rates are staying up, are staying higher, right? Higher for longer. So if we do see a crazy fall off, I might look to try to fade that and try to bounce it right back to the upside, right, for the dollar. Now, if we just run, if this comes out and we start to fly, then that's going to be interesting itself, right? Because maybe on a sweep of the liquidity up at these highs, we do find some more weakness up here, right? And we could just swing us right back into this low and just wait for Mr. Powell itself to start talking. So we might be able to get a quick little play here depending on obviously the reaction, but we're definitely not going to force anything. We're already way out of my trading window anyways to be placing trades. I don't ever really place trades after 11 a.m. Eastern, but hey man, we live, we together. Y'all got my back, I got y'all back, so we're going to go ahead and see if we can find something together and see if it makes sense for us to, take the play. All right, so let's see, family. Let's see, the news is coming out. Where's... All right, let's see what we do. Let's see, come on. We're not really seeing too much of a reaction just yet. The numbers haven't come out yet. Again, highly expected to come out at 5.5%, but we're gonna see what we get here. Where's... Pull up in the pips, we be murdering. Let's see what we get here. Where is it coming? Yeah, we want the numbers. Where's the numbers at? Where's the numbers at? Where's the numbers at? Come on, show us the numbers. This is what we're waiting for us to update right here. Come on. None of it. We be murdering. Alright, yeah, it came out right at 5.5%, just like we expected. Again, no change whatsoever. Again, there shouldn't be no surprise to no change, family. It should be expected. Again, that's everybody was expecting it to come out at 5.5%. And we're really not seeing that much of a crazy reaction here. Like, this is on the lower time frame, it looks crazy, but it's really not that bad. For an interest rate decision type of news event. And it's because it was probably already priced in. Guys, the dollar was running all week because of the anticipation of interest rates coming out at 5.5%. Right? Assets were falling all week because the idea of us coming out at 5.5% and Jerome Powell not having anything positive to say about what's going on. right? So all this stuff is not a surprise. We shouldn't be shocked at all about this. What I am going to keep my eye on is, like I told y'all, right? If this does continue to tank here for the dollar, depending on how we play off around this 105-600 level, hey, I might grab some scalps, right? I'm not planning on finding no crazy long-term plays, but we might be able to grab some scalps here, right? That we could take advantage of just leading up into Mr. Powell's press conference in about 30 minutes. Now, I do have the press conference, or at least a news channel up that we can watch the press conference together on. And we'll see essentially how the market does react to this stuff when it's time, but you know, it's going to be interesting, right? So we're going to keep our eyes on this stuff and continue to monitor how the dollar continues to react. Again, I think we're just going to be very choppy, even though we're seeing a little bit of a sell-off now. I wouldn't be surprised if we do just start to, you know, stay in this range up until Mr. Powell itself, and then when Jerome opens his mouth, that's when the markets are really going to start to move. All right, so we're going to keep our eyes on this stuff, though, family. See what we get. See if we can take advantage of something. All right, let's see what we got here, though. Measure the swings on NQ smaller time frame. Yeah, for sure. Let's go see what we got here. The swings, which swings are you talking about, right? Because we got a ton of little swings here on NQ. If you want BTC Mommy, if you're in my Discord, if you're not in the Discord, I highly encourage you to get in there. You know, I actually have a section that says trade markups. You know, you can send it actually in any of those chats, right? Main chat, trade markups, and let me know exactly what swings you're talking about. All right, I would love to see your swings, a markup of what you're looking at. So I think that would be pretty cool. I think that would be pretty dope. All right, if you need access to the Discord, let me know and I got you. Let's see, until it's confirmed. All right, let's see what YM is doing. YM to 38,250. I mean, it could, bro. Hopefully it does go for you, man, because, I mean, this thing did end up continuing to go to the upside. Yeah, this thing did end up continuing to go higher here for YM. The NASDAQ itself, what is it doing? Absolutely nothing. The dollar's still trying to fall here a little bit. Gold is pushing some here. Gold is pushing some here. Let's see. Do you see the ABC pattern on the 5-minute? You're talking about N-Kizzle? Let me see. The ABC pattern on the 5-minute. You're talking about the corrective pattern? I mean, let me see. Yes, I do. I am in it, but I think I have to pay for more access. I think you might be in the Profit Society Discord server. I'm talking about, are you in the Wealthy Visions Academy Discord server? Because that's the one I'm really referring to. If anything, let me send this in the chat real quick. Right, this is the access to my Discord family for anybody that might want to get access to the Discord itself. Again, we're only going to go up in there. We're going to be providing massive value. It's free to actually join the actual community itself. We do have a paid version, but again, you can at least still join the free aspect where most of the communications happen anyways as of right now, is in the free part of the community. All right, so make sure to go ahead and join this and lock in. And yeah, definitely take advantage of it, man. Definitely take advantage of it. Because we rocking out. We're going to be rocking out in there. All right, let's see, family. Man, these indices are trying to push up here. Let's see. Gold is trying to push higher as well. The dollar index did fall some more. Again, I'm not surprised about this. You know, this event was, again, highly expected, which is why the dollar was running already all week. So on the release, this little sell-off isn't too surprising. We're going to keep our eyes on this, though. Let's see. Let's see. Wish Me Luck. It probably goes back to 37,800. Not that one. I'll look for the link in the bio. Yeah, it's right there. Go ahead and use that one. Are you not with Profit Society anymore? I've been out of the Discord game, so I have no idea. So I'm not with the Profit Society no more. The only one that's running the Profit Society now is my bro Kyle. Shout out to Mr. Kyle Hustles, little bro over there. So he's the one that took over the brand, and he's going to be running the brand itself, right? I separated myself so that I could focus on the Wealthy Visions Academy and my community specifically, and to just go all in on YouTube, right? So every morning now, for New York session, I'm live on YouTube Monday through Thursday. And I wouldn't be able to do that being a part of the Profit Society, right? Because I really want to build my brand bigger. I want to be able to get more exposure. I also want to be able to impact you guys and trade with you guys live in real time for free, right? And it's dope. Okay, so yeah, Kyle's still running the Profit Society. I highly encourage anybody that still fucks with Kyle, you know, go ahead and rock out with my little bro. You know, again, he's still doing his thing. Was the youngest six-figure trader that I personally ever knew in my life. And yeah, he's still gonna do his thing. You know, but for me personally, this is where I'm at. I'm in the Wealthy Visions Academy, the Wealthy Visions Discord. I'm still in the Profit Society Discord if you guys need me, if you're in there. But obviously my focus is going to be on Wealthy Visions itself. Right, so big WVAs in the chat, family, because we're going to go up all day. All right, let's see. Sell or buy today. Let's do both. FM in your hand. Let's do both. All right, let's just both take a buy and sell at the same time. Yo, those questions are always the funniest. Buy or sell today? Bro, you going to give a little bit more context? Like, buy or sell what? Like, what are we buying and selling? Like, it depends on what we're talking about here, right? So whenever somebody says that, buy or sell today, I'm always just going to say, let's do both. Let's just do both, right? 'Cause we don't have enough data or context for me to even know what the hell you're talking about. Let's see. Big WVAs. Let's get it. Kyle's a beast in trade. Yeah, Lil Bro goes crazy, man. Let's see. One of them has to hit. I hear that. Again, family, we are about 25 minutes out from the press conference here with Mr. Powell. We're gonna see what he got to say. Let me see. Is one of my favorite YouTubers live right now? Let me see. Is Meet Kevin live right now? Because if Meet Kevin is live, then that's the one we're gonna watch together. Because I love Meet Kevin's streams. I don't know if he's live though. He's not live on YouTube. What about Twitter? Because he goes live on Twitter a lot. Let me see what we got here. Let me see. No, we got the motherfucking shop on the new. Let me see what we got here, family. Yeah. We be fucking pips too. Let's see what we get here. Family still watching the markets as well. These things is just, again. I think these are just gonna be very choppy, very range bound leading into the press conference itself. I think these are gonna be super choppy, super range bound leading into the press conference itself. Let's see what we got here. Hey, right? All right, family. So we're gonna have to turn down the music. We're gonna go ahead and listen to my guy Meet Kevin. He is live here on Twitter. And like I said, man, this guy is definitely somebody that would change, like, give you a much bigger perception or perspective of the market. So we're gonna listen to Mr. Meet Kevin all the way up until Jerome Powell, and then we'll see also what Jerome Powell says. But yeah, let's go ahead and do this. Let's do this.
At peak, right? Obviously open if necessary. Okay, that's understandable. Then
Let's see.
I want to get something like J Powell, and when it comes to rate cuts, the goal is to start cutting this year, right? Goal to start cutting this year.
Let's see what we got.
So he'll dodge how much. We won't go with how much. So then we'll go with let's see what a purple tie. Okay, all right.
I'm not even gonna lie, family. A lot of people ask me, Abel, where do you learn your fundamentals? Right? How are you so good at interpreting the fundamental data? From watching Meet Kevin. I'm not even gonna lie. Meet Kevin really dissects this information at a high level. Easily one of the smartest, intelligent people in social media, YouTube, whatever you're looking at him. So if you really want to get better at fundamental analysis, like Meet Kevin's him. He's not a trader per se, not a forex trader, futures trader, He does trade stock options a little bit, but that's not really what he's known for. But extremely knowledgeable. All right, so let's see what we get here. Let's listen up and let's pay attention to what he drops.
Over here. X months does not make a trend. That's a good one. Then we've got geopolitical. Let's see. Under the table.
Thanks for the update, Abel. And by the way, I'm a Wealthy Vision lifetime member from 2018. Let's get it, Alex. Shout out to you, bro. From 2018, man. Holy moly. Sheesh. Let's get it. Let's get it. All right, he's just laughing right now. Let's go, bro. Shout out to you, by the way. Let's see what we got here. Sent you a message on Telegram hoping to get access to 2.0. Yeah, I got you, bro. You're definitely going to get it. Make sure, Alex, right? Make sure you're in the Discord and let me know what your name is because you have to get access to the VIP section, right? Anybody that has my course, they get access to the private section of the Discord, which is the VIP trader community, right? So make sure you get access to that, Alex. I know you've been rocking for a while, right? So I got to make sure you're in there. And once 2.0 comes out, course 2.0, version 2.0, then everybody that's in, obviously, the VIP trader section is going to get access to it for sure. I got you. Let's see, Drake got cooked. That's debatable. I'm not going to lie. That's debatable to see if Drake actually got cooked. I think Drake is still up 1-0 for the first couple responses. So I'm giving Drake the advantage now, but I'm a big-ass Drake fan, so I might be biased. Let's see. We got Mr. Rubio in the building. My brother Jonathan, man. What's the word, bro? Good to see you in the chat, bro. Let's go. Another long-time WVA family member in the building. Definitely good to see you, my brother, man. Appreciate you, bro. Is on his live channel. Yep. Is he on YouTube live yet, man? Because I prefer to watch it on live. I forgot he does have a YouTube live channel now. I forgot. Me, Kevin Live. Duh. Let me see. Forgot he got this.
My job.
Forgot he got this damn.
Wage price spiral.
All right, let's go ahead and
Seeing him say spiral, that's a risky one. Okay, economy remains strong. I mean, he's gonna read the statement, so we don't want to give us too easy of one because some of these things we know are in the statement already. So we're not gonna get that. Something about why they're gonna get questions about why they went for 35 versus 30. Why 35? So I'm going to say ask.
Yeah, we'll get into what he's talking about in a second, though. Right, let's see. Like the stream real quick, fam. I love that, man. See, Eric, bro, that's why you got a motherfucking wrench, bro. Because you come on, bro. That's why you got a wrench, bro. You're asking people to, show some love. Family, if you guys are going to be enjoying this content, if you guys appreciate the value, if you guys just want to show me a little love because you think I'm pretty, it don't matter what the reason is, please go ahead and smash that like button one time. It definitely helps out like crazy. TJ in the building. What's the word, TJ? Let's see, think Dixie fly off that 15-minute loan candle, is it? 15-minute loaner? You talking about this one right here that we just reacted off of? I mean, I think the reaction is kind of like answering your question as of right now. I don't know if this is going to be like, if this is like now printing the low before we create a new high. See, I don't know, right? It's like thinking that is this soon before listening to Powell is a little risky if you ask me. So, but I am expecting upside. Like I think we see bullishness in the dollar regardless during the press conference, even after it, just because I personally don't see much that Jerome Powell can say that will cause the markets to be optimistic. Right, when the markets or when there's optimism in the overall marketplace or just sentiment is optimistic, the dollar will probably fall. I don't know if Jerome Powell can say anything that will cause that to happen. He might. I don't see it as of right now. Right, so we're gonna have to see. Let's see. Ain't even worthy of my way when it comes to music. It's quite euphoric that I made that decision. I see what you did there, TJ. Let's see, Drake want to know his nuts. Matthew, you really think Kendrick's diss is better than Drake's? Like, let's be real here. All Kendrick did was literally repeat everything that everybody else said. Like, literally, right? He made jokes about the kid. Pusha T already had said that. He made jokes about him being half black. Rick Ross and, honestly, a bunch of people were already saying that, right? Like, the ghostwriting thing, like, bro, that was like 2015, bro, when that came out, bro. Like, he's literally just reusing disses that everybody already said. Like how you get kudos for that. But Drake was using brand new information that nobody knew about Kendrick. Right? Nobody knew about his deal and how Top Dog gets 50% of everything. That's a bar. Right? Nobody knew that there's so much more shit that we have now found out about Kendrick than what anybody has found out about Drake. Because everybody already knew about the same shit they be talking about. So I'm taking Drake 1-0 because of that. Until Kendrick can come out with some original shit that hasn't already been used in numerous diss tracks, he's losing in my book. Let's see. What's Jerome talking about this time? He's going to talk about interest rates and inflation. He's going to talk about inflation and the impact on interest rates. That's what he's going to talk about for sure. Let's see. My US 30 bars about to get smoked. Are they? Isn't US 30 going up right now? What was your entry? What was your entry, man? You might have gotten a solid entry. Again, depending on what Jerome Powell says, I do think these do fall. I'm going to be honest. I do think these things do end up falling, right? So I'm with you. I agree. I think your buys are gonna get smoked, but I could be wrong. Right? We could be absolutely wrong. Right? So hold that buy. Make sure you protect your trade. If anything, if you have enough profit, make sure you're at break even just in case, and just hope for the best. Right? Even though hoping should never be a strategy, just hope for the best because we're talking about a big ass fundamental event, right? So we're at to see. Let's see what we got here. Drake signed to Birdman, who signed to Universal. Yeah, I mean, so is Kendrick. Like, Kendrick signed to whatever label he is, who signed to another label, who signed to another label. Like, almost every artist is in that type of similar boat. Right? But I'll tell you this much. Drake don't got no deal that's giving away 50% of everything to his manager. Like, Top Dog, his manager, literally gets 50% of everything. Drake definitely don't got that. Right? Birdman and Weezy do not get 50% of everything Drake does. Hell nah. Right? Drake sold his catalog, or I don't know if he sold it, but Drake has damn near like $1 billion record deal. Like, it's just some crazy stuff, right? So let's see. Abel, you can press Windows icon in right arrow, then left arrow to have to. Yeah, I could definitely do it. Like, I could just do this, right? Just swipe up to the top and then do that. You know what? I'm gonna do that just because, like, might as well, right? There we go. There we go. Let me get one it on this side. There we go. Yeah, we'll see. Let's see. 37,880. Yeah, you up right now. Oh, you up nicely, bro. You up nicely. You got a sniper entry. Holy moly. Yeah, your entry is savage, bro. I would definitely not have anything, no risk on the table right now, bro. If you're not break even while getting this sniper entry, you just want to get clapped out of. You just want to lose, bro. At that point, I'll drop my cash app, bro. Just send me the amount of money you're risking in my cash app, bro, and I'll take that. But you definitely want to go ahead and again, this is your trade, right? I'm not here to tell you how to manage your position. You took the trade on your own. Phenomenal entry, but just make sure we understand the importance of managing our money in the accounts. Let's see. I'm in buy. Oh, damn. You got a re-entry down there, Eric, and you ain't even call it out, bro? That's tough. That's tough. What a shame, bro. You ain't tell us. What a shame, bro. Family, he's over here just like hoarding the signals now, bro. That's tough. Let's see. Shout out to Isaiah in the building as well, man. I appreciate you for commenting, even if it's just laughing emojis. I appreciate everyone that just engages and interacts, even if it's the dumbest thing you say in the chat. Even if you talking shit about me, I appreciate you for interacting. It definitely means a lot to me. I know it sounds crazy, but that's a fact. Let's see. Hater YM and NQ not the same thing. Y'all get the booth. I keep the gas. Our family. So listen, we're about. We still got 10 minutes from this conference. I'm gonna now shut up myself. Where's Mr. Alexander? Mr. Alexander said I'm a snake man because I talk too much. So the snake man is gonna allow Mr. Me Kevin to take over, and we're gonna watch these charts and see how the market's react in about 9 minutes. Hopefully Alexander is here. You talk a lot, I love it. Yo, that's gonna be like the funniest inside joke ever now. Shout out to Alexander, man. Hopefully he is on, yo, because that is dumb funny. That's gonna be the hilarious inside joke that we always run with here now on this channel. I'm the Snake Man, remember that. I'm Mr. The Snake Man. But all right, I'm gonna shut up. I'm talking too much. I'm gonna shut up. Let's listen to what they say here.
Be asked, won't he, in a few minutes' time, in about 8.5 minutes' time, he will certainly be asked whether there is
Slytherin is crazy.
that inflation resurges and he has to raise.
Yeah, you know, that's not my base case. And to be frank, my base case isn't necessarily stagflation. But I think that if you have a runway long enough right now to consider all the moving parts, I cannot dismiss how debt is a growth killer. And it's not only domestic, it's global. And it's only going to get worse. Even the IMF's numbers have some global growth kicking up a little bit potentially in the next 12 months. But if you look at their longer-term prognosis, debt is going to dwarf growth, and it's going to be like an anvil on top of the shoulders of growth.
Well, I worry, too, about the volume of debt that we've added to the economy, and now at higher interest rates, how much more we're having to pay to surface that debt. Let me come back, though, to the stagflation.
Look, he's not wrong. I mean, some of the numbers absolutely have been coming in hot. You know, I'm not here to say he's wrong. I think the GDP Q1 numbers, there's some problems with that. You have to think when companies aren't building up more inventory, it's because they think either demand is coming down or supply chains are looser. And the fact is, supply chains are a lot looser. That had a big GDP. But price pressures, yes, problem. Big problem. First 3 months, problem. ECI, problem. The next ECI will be a problem for the next quarter because you got stupid states like California. Sorry, I know I live in California, so I'm allowed to say it. And I also ran for governor in California, so, you know, I feel like I'm allowed to complain because I actually tried to change it. Not that other people didn't try, I'm just saying, like, I'm allowed to complain. So, the problem is, you know, you've got California that's probably going to be adding 2+, 0.2 plus to our ECI solely because they're paying fast food workers with basically no skills $20 an hour. At a minimum wage, food prices like shot up. Chipotle, McDonald's, a lot of them are going bankrupt. The franchises, they can't pay these fees. So of course, that then is going to lead prices to go up for people who are in construction, people who are working for $25 an hour as a journeyman or whatever, electrician. Like, you're just going to push up the whole chain, which is fine. I'm all for people making more money, but let's be clear, that is also something that will contribute to an inflationary problem.
Neither the Fed nor the Fed futures market have been particularly good about predicting what's going to happen. The Fed was talking about transient inflation for a long time before they took the word transient out of the conversation. Now the Fed basically is saying, well, we're going to be ready to cut rates, but now maybe not so soon, not so fast. The market, similarly, last fall, thought there would be a lot more rate cuts coming this year than the market says today. So who's the good predictor here of either what the Fed is going to do, what inflation is going to do, what the economy is going to do?
Heads up. The odds of an interest rate cut by the end of the year are now down to 1.18. 1.18. And I should be clear, that 1.18 represents the number of cuts we think we're going to get. So let's write this down. So J. Powell speech, we're just looking at negative 1.18 cuts this year.
You guys need the volume a little louder? Amy, you guys need the volume a little louder? Let me know, because I could raise it too. I think it should be loud enough now, but let me know.
Tinkering with rates, how can the market actually rise to the occasion and accurately price risk? In my opinion, 4 weeks ago, you did not see an ease in today's Fed meeting. That's what the Fed contract is good for. And anybody who thinks that looking today is going to give you an accurate picture of July, Sep, Nova Ds, and Fed fund futures, I think they're misguided. It really is for the next meeting.
He makes this very clear. He's made the same argument like 20,000 times. But basically, his belief is that the market is really bad at predicting how many cuts we're going to get. And the only thing the market is good at is telling you is, are we going to get a rate cut in the next meeting or not? So basically, his opinion is it's binary. Do we get a rate cut in the next meeting, yes or no? Other than that, the market is not good at predicting rates. And he might be right about that. I don't know. He might be right about that. So we'll see. Take a look at this. This is the NASDAQ right here. You've got a little bit of a move up, sitting at about 25 basis points down. We started about half down. Then we got that more than expected loosening, which is dovish. I want to be clear. I'm going into this now. I'm flipped. I'm going into this 60% dovish versus 40% hawkish or bearish. Reason being that accelerated, reduction in tightening to 25 bill versus 30 bill that we were expecting. So $5 billion there. I think that was a signal that we're going to get a little bit of a dovish Fed here. So we'll see. But as you can see, the market is clearly trying to get enthusiastic here. The Qs might actually go positive. So you are getting a more dovish Fed. I want to be clear about that. It could be good for TMF, could be good for the Qs, could be good for risk assets. You can see some of that pain is going away on NVIDIA. Now, some of that has already reversed on BTC. Some of the excitement ran up to about 58.1 there. Back to our line. Bounced off the line, 57.5. And back up. Jay Powell will be out in about 3 minutes. We'll be doing the Jay Powell Q&A. We'll be covering that. Once again, if you're just now joining, we will cover Jay Powell live. Then we'll do his Q&A segment. Then we'll do a summary of everything that's going on. Then we will do the House Hack Q&A. If you've got questions for House Hack, email ir@househack.com. Questions on the courses on building growth. We got so many emails last night. Send an email to staff@meetkevin.com. We're about to change the price on it. Haven't done it yet, but there were some people asking for BNPL.
You know what's crazy, family? Just real quick. Mr. Powell should be speaking in a couple minutes too. But it's a big shout out to anybody that's in any positions right now that are eating. I will say though, I think these are just running right now for a short term. I could be wrong. Jerome Powell could say something that causes these to fly. I don't know what that could be. So just make sure you guys are, again, managing your trades correctly if you guys are in any of these positions. Because what I'm going to be doing, just like I told you guys at the start of the stream, right, if we do sell off here, especially looking at the dollar, I'm going to be looking for these buys regardless, right? Like I truly think, I don't think there's much that he could say that will, I mean, again, I need to stop saying that because then he's going to prove me wrong, right? And that's cool if I'm proven wrong. But I'm still very much bullish the dollar. I still think gold ends up falling down. I still think YM, NQ, ES, all these indices, I believe, still end up going bearish as well. Again, I could be wrong here, but that's just my thoughts and my opinions as of right now. So, yeah, just make sure you manage your position correctly, if anything, family.
Back up to about that 183 line, so some enthusiasm coming back there. Of the day, and look at Coinbase right back to its 213. It's funny, it's always getting back to 213. It feels like 213, or going back to 218. My fault, it's at 213. It always seems to go between this range 218 and 218.
I'm gonna be right back, family. I'll be back in like 2 minutes. I'm gonna let this rock, obviously, but I'll be back in like 2 minutes.
We are just about 30-ish seconds away from Jay Powell walking out to give us the good old Jay Powell. So we'll see what we get today. Let's listen in.
A lift on the statement, of course. Fed day reactions sometimes can really be very much a Quicksilver type of thing. You don't know if the first move is the right move. But I do think that's because there was an absence of incremental hawkishness. Plus, you had that further decline in quantitative tightening, perhaps beyond what people were projecting.
Yeah, and of course, David, I asked him what the trigger word would be here, and he said hike. Anything having to do with hike. And so, David, you were right there.
All right, waiting for Jay Powell to come in.
It will be interesting to see, however, how the chair handles questions about whether an interest rate hike was even discussed in their meetings.
Yeah, he's gonna have to play that one very carefully.
Come on, baby.
I think he'll have to admit it's always possible to raise interest rates, but their base case is still just about the timing of rate cuts, not the option of hiking rates.
And your base case, sir, just once more for the record.
At the moment, 1 or 2 rate cuts, nothing before September, maybe nothing before December, but some cut this year.
Let's go to the chairman of the Federal Reserve, Jay.
He's on time. He's on time. He's on time. He has a laptop. Is that a laptop? Dude, is that the freaking iPad? No, what is that? It's some laptop.
Mandate to promote maximum employment and stable prices for the American people. The the economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year.
Look at that, we nailed it.
The labor market remains relatively tight.
Nailed it.
But supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored,
He finally
as reflected
acknowledged
in a
it.
broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually.
Yeah, feels neutral so far.
Slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Q's just gained the lead.
We'll do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
If it stays this neutral, we'll rally into the close. This is a very neutral Powell right here.
With Reuters. A question to follow up.
You heard him.
Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at surveys of workers and surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina.
Pretty good so far.
Thanks for taking our questions, Chair Powell.
There she is. Where's Nick
I
T?
wonder, obviously Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
Tesla.
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely.
Yes.
That's very bullish.
Our policy focus
bullish
is really
indices.
what I just mentioned, which is how long to keep policy.
And he's helping the bulls out. This is definitely very, in my opinion, family, so far, based on what he's saying, this is extremely bearish the dollar. Everything is hinting towards him still being extremely optimistic that inflation will eventually come down. They're going to hold their stance, but he's showing signs that they're closer to cutting rates still than they are actually raising rates. So this is still very bullish. Indices, bullish, or not indices. Actually, yeah, bullish indices, bullish gold. Pretty much very, very risk on. Sentiment is what we're getting so far, for sure. And we're seeing the markets reacting that way based on his answers.
What I'm saying is that policy weren't tight enough to achieve that. So it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Good news. Good news. Where's Nick?
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So one, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down
More jobs.
to 2%. And another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Yeah.
And could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Yep, TMF pumping.
Yeah, these markets are rallying off of
Dovish. Dovish. This is good.
Very dovish, no cap.
Nick Timrose of the Wall Street Journal.
He's next door.
To what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really,
sheesh. Let's go, Eric. Come on, boy.
What we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's what we're tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
There it is.
So,
it's a good question.
I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year. Very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also
so dovish
monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
That was like the most dovish thing I've heard him say so far. That's really impressive. That it's like, all right, let wage gains be hot. That's okay. Inflation can come down really fast despite that. That's really dovish.
To gain more confidence.
Your family, when he says dovish, right, when they're referring to dovish or hawkish, they're referring to the sentiment that the Fed actually has, right? When the Fed is dovish, that means that they are leaning towards cutting rates closer than actually raising rates or keeping them even, where they're at, right? So dovish is a Fed that leans towards cutting rates. Hawkish is a Fed that leans towards raising rates, right? Just want to clarify that in case somebody was confused on what that means.
We didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of conference. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
All right. That's all expected.
Mr. Chair, Steve Leisman, CNBC. If I could follow up on that, what particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing. We have put the thing under a microscope. I will say, nothing is going to come out of that that's going to change the view. I think that in fact we didn't gain confidence, and that it's going to take longer to get that confidence. I just think you know the story. What what's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. And I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast.
Oh, there it is.
I think my confidence in that is lower than it was
Second half.
because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time.
Yep.
We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So
he read our bingo card.
Is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates, and this is a.
Hey, I'm not even gonna lie. Like, Jerome Powell really is him right now. Like, he's saying everything that the markets want to hear, but he's also holding strong, saying that, listen, we're gonna still have to keep interest rates higher for longer, but this is where we see things headed, right? And he's saying lower inflation the second half of the year. I mean, there's a few different quotes that I'm over here looking at that he's talking about that are just so hawkish, right? That I think are only going to completely cause indices to run, gold to run, the dollar to probably continue to fall. And one of them, the one quote that I seen that I heard him say, right, that I think is really standing out the most is when he said it's unlikely that the next policy move will be a rate hike. Unlikely that the next policy move is a rate hike. For me, that's leading to, okay, so if the next policy move is not a hike, then it kind of has to be a cut, right? Because we're already standing still. We're already at a standstill. Like, we're not raising or cutting right now. But when you put that quote that he said, and with what he just said a second ago, saying in the second half of the year we expect inflation to truly slow down like crazy, that is very bullish to markets. Obviously, that's the reason why the dollar is falling. And as of right now, family, I'm wrong, right? I thought there wasn't anything that he can say that will cause these markets to rally, and completely overlooked all the shit that he's saying now, because he's on fire, going crazy, and the markets are absolutely loving what he's saying right now.
Down over time. Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on 2%. We didn't get, our confidence in that didn't increase in the first quarter, and in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the
no hike
mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis. It's become, we're now focusing, the other goal, the employment goal, now comes back in to focus. And so we are focusing on it. And that's how we think about that.
Claire.
Bullish.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It would be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your question, your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%.
He said, stole the test review.
So I don't see the stag or the inflation, actually.
He said, I don't see the stag or the inflation.
That's great.
That's a bar. I don't see the stag or the inflation.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up. And of course, he's Mr. Potential Growth, our star. Do you share that view? And would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question, we've had what amounts to a significant increase in the potential output of the economy. That's not about productivity. It was about having more labor, frankly, both through in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year. And last year, for that matter, too. So I think in that case, I think you really do have a significant increase in potential output. But you've also got, you've got more supply, but those people also come in and they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point, you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And, our evidence for that I went over earlier. You see it in the labor market. You see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Edward. Moon.
Thank you, Mr. Chairman. Edward
To the moon.
Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And, are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return.
He's cooking up. He is cooking up, family.
Over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
All right.
Yeah, he's talking his shit. No lie.
Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between, starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December?
Yeah, good question.
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is.
That was me.
We just don't do that. I mean, you can go back and read the transcripts for every. This is my.
Oh, he's shutting her down hard.
Fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
This is personal now. Damn. Oh. Bring out the fire hose.
Thank you, Chair
Somebody just
Powell.
got burned.
Mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures, employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall, but we have ways to go on that.
Scott.
Where Eric is coming, Eric is coming. We need one more positive thing from Powell, and you got that, bro. Come on. That's a bar right there on the screen. He said, I don't see the stag or the inflation. That shit is just so funny.
The weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's at headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, and but it's also in this case unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason
this time
having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And so this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Somebody just bought a course with the name DJT.
Chair Powell, I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing?
He literally already did. You're wasting his time.
And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low.
Yep.
But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expect that this will happen.
Thanks.
Yep, same thing.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
That's fair.
So that you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. They have their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation, and so they're navigating this pretty well this time.
Nice. Jennifer. Reminder to follow me on Twitter. I've been sort of tweeting during this as well. X. Real Meat Kevin.
With Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and
All right, family, I'm not going to continue to watch this, but I do want to give a few thoughts before we go ahead and wrap this up, because they're pretty much just asking the same exact questions over and over. If you do want to continue to watch, I just dropped the link of this in the chat to meet Kevin's live channel so you guys can watch that. But everything that he's been saying so far, man, has definitely been very, very dovish in terms of interest rates itself, or not, yeah, in terms of interest rates. He's really maneuvering around these questions in a way that's bringing a lot of confidence back into the marketplace, and we can see that by literally just looking at the charts. Right, like indices are flying right now. US 30 is up, what, from when he started, up almost a full % or so on that bad boy. NQ flying as well, up almost 2%. You know, the S&P is also up around 1.3% or so. Gold is also up from before he started, around a full % as well, up around 200 points or whatever the case may be. And the dollar has just been falling, right? The dollar has fell pretty nicely, right? So everything he has saying has been very, very dovish, right? Has been more so leaning on the side of risk on. Turn the risk on. Let's go ahead and start getting back into hard assets. Now, we have to see if the market continues to do that, if it continues to run this way. But everything that we're seeing right now, based on what he's saying, is definitely very bullish indices, gold, stocks, crypto, everything, right? With that said, if everything continues to stay the way it is, Bitcoin fell pretty hard overnight, right? It ended up falling all the way down to the 56,000 level. With everything that Jerome Powell was saying, I wouldn't be surprised if around this area is the new low that's formed, and that will be the lowest point that we see before price actually goes ahead and now breaks all-time highs, and we truly take advantage of the entire bull market, the bull run that everybody's now been waiting for. I mean, we've been literally dealing with this consolidation for the past 2 months now, right? So maybe the tone that Jerome has can set the tone for the rest of this year, especially with crypto. So if you're not invested into crypto right now, family, or just yet, and you didn't buy anything on these dips, you're playing yourself, right? I think, I could be wrong here, but I truly think that this could be the new low or the last low that we see until we actually go ahead and now start to trend higher. Again, I could be wrong, but based off what Jerome's saying, the markets are loving it. They're eating it up, and they truly are. They're leaning on the side of optimism more than anything, because Jerome Powell was leaning on the side of optimism, right? He truly believes that a rate hike is just not on the table. Like, that's not even a part of the conversation right now. Like, we're not even thinking about hiking rates. Our goal is to get to 2% so that we can cut as fast as possible, right? And that's what he's literally been saying all day long. He keeps on just highlighting that point. Like, listen, we're not here talking about rate hikes. We understand that if, data changes, then we'll get to that point, but that's not even on our table just yet, right? We like the path that we're heading. Even though we had a couple of readings that have increased in terms of inflation, that is actually to be expected, but we expect this thing to actually continue to fall. And he said during the second half of the year, he believes that inflation will finally start to get into those levels that he's excited and they're hoping to actually get to, which is extremely, extremely bullish. Hard assets, indices, stocks, crypto, so on and so forth. But man, what a interesting press conference. But I do want to bring up the fact of stagflation, right? Because that was the funny point that he said. He's like, what's stag and what's inflation? Like, where is that even coming from? And I think he's playing dumb when he says that, right? Because he understands that stagflation is a real possibility, which is why a lot of people talk about it. And it still is. If we look at the most recent reports, I mean, what is stagflation to begin with, right? Stagflation occurs when we're seeing no growth, but inflation is still going higher, right? Essentially, we're seeing our economy contract, but yet the prices of everything is still growing. That is considered stagflation, and that's a very scary position to be in, especially as his job as the Fed, right? But if we look at the last couple GDP reports. I mean, I only got 2 here. I could bring up a whole bunch of other ones too. But he said stagflation is not an issue. And again, I don't know if I believe him on that, because we haven't seen growth at all in the past few months, right? We've actually seen our GDP contract the last 2 readings, right? The last reading that we had was right here for Q4, right? The final revision of Q4 of 2023, and that was at 3.4% growth. This most recent that we've seen for Q1, we're only at 1.6. So we're seeing contraction in GDP. Now, we haven't seen contraction or negative growth back to back, which is I think will really bring up the talks of stagflation, because we're still seeing growth. Like he mentioned, he's like, listen, we're still growing at 3% overall, right? Quarter over quarter, which is still really good. So that's why he's not too concerned about it. And I don't think he's going to be too concerned until we start seeing negative growth, right? Because then once we see negative growth, then that's really when the conversation starts to come into the topic, right? About real stagflation. But we're still seeing growth, even though the last one was kind of small at around 1.6%. I mean, that's the reason why they started raising interest rates, to try to get that to slow down. All right, so it's going to be very interesting to see how this continues to go, but I don't think stagflation is going to be too much of a concern, especially the way Jerome Powell was talking, unless we start seeing negative growth on our quarter over quarter numbers. When we see that first report that we're seeing negative growth, now you're going to start to hear all the talks about, stagflation, and then when we get closer to the next report, they're going to start talking about recession, because, again, the definition has always been 2 quarters of negative growth back to back was always considered a recession. Obviously, they changed that definition over the last couple of years. They ended up starting to change it and adding a bunch of other factors to it. But once we get to that point, then that's when I think stagflation will really be a massive concern, and he'll start to talk about it a lot more. But I think I'm with him. We're still seeing growth, right? We're still seeing growth. Stagflation occurs when there's no growth, when we're not growing, but inflation is high, right? We're still growing, and inflation is still growing too. At least right now, we're seeing a period of it. But we're not at a point where we're not growing whatsoever as our economy should be, right? So that's an interesting conversation. And Warner, man, I see you had some strong opinions, man. So we might have to, what I want to do? I really love these type of conversations, right? And I would love to open it up to you guys that are willing to express your thoughts and opinions, not just through the chat, but actually like talking, right? So next conference that we get, obviously, everybody that's in my VIP community, everybody that has my course, you guys are all going to get access to that Zoom. But I also want to bring on people that are going to be vocal, right? That are going to express their thoughts and opinions, right? Like, I love having these type of dialogues and these conversations because, it's so valuable, not just for me and the person having the conversation, but everybody that's going to be listening. So I want to open it up to everybody, right? And if you're willing to unmute your mic and actually joining on the conversation, then the next big news event that we have, we can go back and forth and just really talk our points, right? It's never about figuring out who's right or wrong. It's just about really expressing our opinions on the market, right? Some of us are going to be proven right. Some are going to be proven wrong. I was proven wrong today, right? I thought there was nothing that he could say that could make these markets rally, and these markets are only rallying, right? So it is what it is. It's a part of the process, right? But I would love that, right? So Warner, next conversation we have, bro, maybe next, report that we get like this, let's get on a Zoom. And let's actually go back and forth and just really, express our thoughts and opinions and see where we go from that, right? Because I think that will be super beneficial for us, but also for everybody that's also listening as well, right? So we'll definitely set that up for the next one, family. But at the end of the day, man, I do appreciate you guys for tuning in. You guys are all phenomenal. Hopefully, we were able to get some value from that call. Eric, it sucks that you weren't able to actually go ahead and get the TP just yet. And I know you said you kind of closed your partials. And we'll be honest, that's the worst, right? When you close your positions and now you're only like $100, $200 away from passing, like now the pressure really starts to pick up. But listen, you got this, bro. You more than capable of going ahead and navigating through it, getting to the funded account, and let's hurry up and get you some payouts, my brother. Right? But family, I appreciate y'all, man. I love y'all. Another dope session. We're 2 for 2 today with sessions, man. And guess what? We'll be back tomorrow, same time, same place, for New York session, and we can find some more trades and more opportunities to go ahead and take advantage of. So, family, I love you guys, man. I got to go ahead and jump off. Wifey's about to kill me because I was supposed to then be off because we got to go make some moves. But I love you guys, man. Appreciate y'all. And I'll see you guys tomorrow on tomorrow's session. All right, y'all. Have a great rest of y'all day. Let's get it.
Every moment turns into a twisted in the road. Every word you you say, it burns a hole right in my soul. All you do is lie to my face, that's all I know. Listen, don't get it twisted, so I gotta let you go. It's all on my mind, tell that to me, that I'm making it all. It ain't what I see. All of the time, I gave up my time, I'm worthless to you. It feeding me lies through those tears when you cry. All on my mind, it ain't even true. It's the thing that you do. Walk away, they always say, guess I gotta think this through. Every last moment was a memory faded, so I guess I gotta escape that too. Yeah, I gave it my all, you stole everything. All the red flags, I missed all the clues. Yeah. Every moment turns into a twisted and dark road. Every word you say, it burns a hole right in my